It's already happening. While most Americans are hoping for home prices to finally cool down, the real data points to something far more alarming. 2026 might not be the year the housing market becomes affordable. It might be the year it becomes untouchable. And the worst part? Almost nobody sees it coming. Before we go any deeper, make sure you subscribe and hit the like button. This channel follows the financial stories most people ignore, until they become impossible to escape. New reporting from U.S. housing associations quietly reveals what's coming. According to their estimates, home prices are expected to rise again in 2026, somewhere between 1% and 4% nationwide. Small numbers on paper, but devastating when layered on top of the most unaffordable housing conditions in modern American history. So how do prices continue going up when most people can't afford to buy a home? That question leads to a much darker truth. Economists call it the accessibility trap. High mortgage rates and skyrocketing rents crush savings, inflation eats away whatever's left, and millions of would-be homeowners are stuck waiting for a crash, waiting for a correction, waiting for an opportunity that never comes. But here's the trap. When rates finally fall, even just slightly, everyone rushes in at once. Years of pent-up demand turn into instant competition. Panic buying, bidding wars, fear of missing out. And nothing pushes prices higher than fear. But the real winners in that frenzy aren't families. They're the players who don't need mortgages at all. Institutional investors, hedge funds, private equity firms, foreign capital, buyers who move in silence with cash and without hesitation. Now, let's ask the uncomfortable question. If the average American can't afford a home, who is the housing market actually for? Families, workers, young couples, veterans? Or has the market quietly shifted toward a different class entirely? Because the data suggests a disturbing answer. Housing has stopped being shelter and has become an asset class. And when something becomes an asset class, the price no longer cares about the people who live inside it. Everything now revolves around a single trigger: interest rates. And this is where the real danger lies. Housing associations predict that in 2026, rates will likely stabilize or dip slightly, not enough to make mortgages truly affordable, but enough to unlock demand. Imagine millions of frustrated buyers, priced out for years, suddenly believing the window is opening again. They rush back into the market, they compete. And in a market starved of supply, competition doesn't create affordability, it creates scarcity. Because here's the truth nobody likes to say out loud. You can't buy what doesn't exist, and America is missing millions of homes. Builders slowed down. Zoning laws prevented construction. Supply chains broke. Boomers refused to sell. And inflation made new builds more expensive than ever. This isn't a temporary glitch. It's a structural shortage. Meanwhile, millennials and Gen Z are facing the worst housing accessibility crisis since World War II. Many spend half their income on rent. Inflation eats their savings. Down payments become impossible. And those who finally manage to save something watch the goalposts move further away every single year. At the same time, older generations hold on to homes purchased with 3% interest rates. Why would they sell? Selling means trading cheap debt for expensive debt, and nobody does that willingly. So the market freezes. Inventory disappears. Prices climb. Renters drown. And this brings us back to 2026, prices rising 1 to 4%, rates dipping slightly, inventory locked, funds positioned, renters desperate, builders behind schedule, investors hunting yield. The perfect setup for a new scramble, not for homeownership, but for control. If current predictions hold, the U.S. housing market in 2026 won't be defined by a crash, but by a divide. Homeowners and investors on one side, renters and wage earners on the other. One group builds wealth, the other pays for it. We are not heading toward a bubble pop. We are heading toward a new class economy, and once these shifts begin, they rarely reverse. If you want the full story, the players, the winners, the losers, and the opportunities hidden inside this crisis, make sure you subscribe. Because the next phase of American housing has already begun, and most people are still waiting for a crash that isn't coming.